Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 7, 2021. I get a question many times, hey, you know what? I want to sell some put option and earn a income. So when you sell put options, you got to look at strong candidates. As an example, here I got companies with nice sales growth and gross margin. These are the stronger candidates to select from. And when you sell put options, your outlook is bullish. You want the stocks to go higher, and also you want to make some money. So when you sell put option, look for the candidates with a nice IV percentile. As you see here, all these stocks I have selected here have got nice IV percentile, 52 percentile, 50 percentile, so on and so forth. So when you sell, options, put options with the high IV percentile stocks, you earn a better premium. And at the same time, you want the stocks to be oversold. Look at the RSI levels here, 26, 29, 19. That tells you, these stocks are really down right now, pulled back hard, and they should turn around. So the secret formula when you sell put option is to make sure the stocks have got great fundamentals indicated by rule of 40 here, and stocks have got high IV percentile so that you can get more premium. And also these stocks have got a lower RSI, meaning you want the stocks to bounce back. So that makes these candidates, these very good candidates to buy. Let's take a look at few examples here and take it from there. So for example, first I will look at let's take a look at the first one here with the high IV percentile of 44. Actually, let's look at this one. Let's look at the next one here, GH. Let's go to Thinkorswim platform from TD Ameritrade. So let's bring up GH here, Guardian Health. This is one of my favorite stock. At times it drops a lot. And right now, after dropping a lot, as you can see here, it's showing some progress. There is a small candle here telling you stock is trying to turn around here. And by looking at the IV percentile here, IV percentile is 49. That tells you right now there is a good opportunity to make some money off of the premium here. And earnings is a little bit later here, 10.6. I think it's just happened yesterday. That's why stock dropped big time, showing some progress here. And from a chart perspective, nothing to brag about here. Chart is a little bit ugly right now, and it's showing some uptick. That's why we want to buy. So now let's look at the option chain here and bring up GH. As you can scan here, when you are an option seller, especially put option seller, you don't want huge exposure to time. I would look at 43 days out in this scenario. Anywhere between 40 and 50 is desired. And by scanning through this here, you can see there are more call options traded than put options. That tells you stock is bullish right now. There is a lot of sentiment, positive sentiment in the options market. That makes the put call ratio 0.03. That tells you there are more calls traded than puts. It's in a bullish territory. So now, when you want to sell put option, look at a shorter term, which is 43 days is good here. We can go over there. And let me close this bar here. And stock is at 106 right now. When you want to sell put option, one thing you should always focus on is a column here called probability of touch. So that tells you what the probability of stock touching that price. As an example, if you look at here, we got $80 here. Probability of touch is 24%. That tells you, there is a 24% chance stock can come back to $80 by 19th November, which is 43 days from now. Typically, that's a good, probability of touch here. You could go with that. But if you want to be a little more, you want to bring in a little more money, you could go to 85 here. Probability of touch is 34% here. That means about 70% or so. It may not touch this $85. That's why you're earning a premium here, because there is risk involved here. you are earning a premium. So I would say, if you are just starting out with selling put options, be a little more risk averse. You could start with the $80 here. There is a chance of reaching this $80 by October. By 19th of November is just 24%. So I would take that chance and sell some put option here at a strike price of 80. So with that, you're earning 85 cents here. If stock stays above $80 by 19th November, you get to keep this entire 85 cents here, which is $85, as you can see here. And buying power effect is 822. If basically if you have some other stocks here, you get to have a buying power decrease here by $822. Think of it like a free pass from your broker. If you already have some margin account, your margin will be decreased by $822. You could confirm and send. So you could trade this. This is one of the ways you can earn money by selling some put option. If the stock does not reach $80 by 19 November, you get to keep this entire $85. If the stock comes below 80, then you'll buy the stock at 80, or you could just sell your put option with the loss. So that's one way to do. If you're a little more aggressive, you could do here 85. You could sell this put option here. You will earn $1.55. Probability of touch is 34%. Many people are comfortable with the 34% probability. So you could confirm and send. You will earn a better premium here, $155. Your buying power effect is 865, as you can see here. And if you're a little more conservative, you could sell a put spread here. You could say, I want to sell 85 and 75 spread. So if you do that, you're really selling a put spread here. There you go. So you're selling 85 and you're buying back 75. There you go. So here your risk exposure is less and you're bringing in good premium here. You could confirm and send this. If the stock break-even point is $84, and as you can see here, your max profit is $95 and your buying power effect is 905. This is a little more conservative strategy if you want to do this one. But many times I tend to go with the lower, maybe 80 strike price, so that way you don't need to do 2 legs, you just do 1 leg. At the same time, you're far below current stock price. So depending on your risk appetite, you could do just a naked put $80, or you could do a put spread here and limit your exposure. And this is a defined risk strategy. Even if the stock goes down to 0, your exposure is just $905. Your margin account will not fluctuate. This is a better way to sleep at night. So those are the ways that you can do put option trading. Probably we look at a few more. These are some of my favorite stocks here. I love stocks like ResMed here. DGX, one of my favorite stocks, keeps going up and down a lot. Even Bruker, I love this company also. You could play around with these stocks here, given there is a high IV percentile, as you can see here, and there is a low RSI, nice sales growth. I think you could take advantage of these scenarios here and sell some put option. If you're not very comfortable selling naked put, just do some put spreads like I talked about. That will be better for you, for the beginners. So with that, thank you very much. Happy investing and trading.